advising clients across the country. Here he is, your host, J. Christopher Boyd.
Welcome. You're listening to Something More with Chris Boyd. I'm Chris Boyd, certified financial planner practitioner, and I'm here joined by two of our advisors from Asset Management Resources, both named Jeff, not to make things confusing. But Jeff Perry is with me again as my co-host throughout the show. Thanks, you. Jeff.
Yep.
And Jeff Tamaning is joining us with designations longer than his arm.
Hello.
You either have a very short arm or a lot of designations. I'm not sure which.
A lot of free time on my hands.
Jeff, why don't you just put your name and then go A to Z?
Yeah.
In every combination therein.
There are other implications around that.
Yeah.
Thanks everyone for being with us. And we thought this time around we'd talk a little bit more about getting the most from your financial advisor, and that's why we wanted to include a couple of financial advisors in the conversation. Hopefully they have some good ideas. So Jeff Perry, you came across this article in the process.
Absolutely. Can I start with something at the other end of your financial advisor? Can I start off with a CNBC survey and article they did a little while ago of why people fire their financial advisors?
Yeah, absolutely. I think that I have a theory. I think it's often because they don't hear from their financial advisor enough.
Well, you are correct, but let's go through them. The number one reason is that the advisor's goals are not aligned with, or that the client doesn't feel that they're aligned with their goals. In other words, the advisor's going one way and the client wants to go another way.
That can align with the whole question of fiduciary or product sale or something like that.
Right. Jeff, you've been in the business a long time. How do you avoid that? What strategies do you use to make sure that you're aligned with your client?
Well, I think it starts with getting to know the client beyond just the numbers. I think it's very helpful to find out what makes them tick, what's important to them within their life plan. And once you do that, then I think the financial stuff tends to fall into place. I think where we run into problems is one around expectations, and two, when we're talking here in the article about the advisor not caring about your goals, sometimes the advisor they're thinking we're trying to get the best performance in your investment portfolio, and then the client might have, maybe they're just trying to find the right portfolio to meet their needs.
Right. Chris, maybe some of the people who are listening don't understand the process of like what we use for when someone comes on board or someone's asking us for their thoughts. Could you just expound on that so it kind of demonstrates why we might make sure? Yeah.
I think we often make the analogy to the doctor's office. You don't want to go to a doctor who says, before you've even come into the examining room, I've got the perfect solution. I've got the prescription for you. Here's what you need.
Right.
Right.
Exactly.
We take that same approach. We want to step back, get to know what's your issues, what's your priority. If it's what's ailing you or if it's about what's a concern to you, we want to spend some time talking about you. We have a multi-step process that we use for when we have new introductions and people that we're evaluating if we're a good fit, and they're vice versa. We start with we call it a get to know you about you meeting. It's really get to know all about your particular situation, where we want to find out not only those financial issues, what are your assets, liabilities, income, expenses, insurances, estate plan, et cetera, tax information and so on. All those granular things of the mechanics of a financial plan, but also some of those priorities, maybe it's goals, maybe it's values, maybe it's about, family dynamics, whatever it may be in a given circumstance. So in that first initial consultation, we really just talk about you. And then in the second meeting, after we've had a chance to gather all of the information that maybe was there, maybe wasn't, that we need, we do an analysis, we do some assessment, we put together essentially a financial plan and forecast how do things project, so that can inform how do we think about portfolio design and the ongoing considerations of not only asset allocation, but how do we get from where we are to where we want to be. And so usually that's a second meeting, and we provide people with some PowerPoint and financial plan. We can either make available online or a PDF or something. And then subsequently, people will go home and think about whether they want to engage us for ongoing services for the portfolio management and so forth. And if they do, they come back for that. So we set up the paperwork and get it underway.
People are
so
often,
multi-step.
Yeah, people are often surprised about the length of that process, especially those folks who are, may have had a experience where they're going in and being sold something, a specific product. So it is, so having that complaint as the number one reason people fire people, of not having the advisor aligned with the goals, is greatly reduced if the advisor really gets to know you. It's the underlying story.
And asks about what are your goals, right?
Yeah, well, that too, right?
And
As
has
simple
clarity around
as
that.
simple as that is, right?
Yeah.
So the second reason is excess and unexpected fees from the advisor. So that's all
Let's
about.
talk about fees. That's fair. I mean, I think fees is a difficult thing to talk about in a sense because one, there's lots of different kinds and it can be challenging. Of course, it's always challenging to talk about cost, right? Especially as a provider of service. That being said, we often start by talking about value. What's the value of good financial advice? And one of the things that is part of that good financial advice is paying attention to cost. So costs can take shape in all kinds of different ways. Some people who provide financial services are paid through commissions. We happen not to be, but some people are. That in and of itself doesn't define whether someone's good or bad or cheap or expensive or whatever. But that's one consideration. Transaction fees is another potential cost. The actual trading on the platform can have some expense. The things that are purchased, whether it's a mutual fund or an exchange traded fund or an individual stock, or security of one type, some of these have costs embedded inside of them, not stocks necessarily, but when it comes to funds, certainly. So paying attention to what are those embedded expenses is relevant. And of course, there's if in our case, we charge a fee. How much is that? How's that compare to, an alternative? Well, I would argue in most cases, you don't necessarily want the most expensive or the least expensive. The least expensive may not give you all the same services and the extent of resources that you envision as what you want. At the same time, if someone's the most expensive, are they really worth that higher price?
That's right.
So there's a challenge to find what's the right fit.
To me, it seems, since this is why you fire someone, meaning you've already hired them, I'm interpreting, kind of drawing an inference, but if it's excessive fees and unexpected fees, to me, that shows it's either a disclosure issue, meaning the client, when they came on board, weren't adequately explained.
Right. A lack of communication.
Or a communication issue, right? Because if you sign up for a certain level of fees or transaction fees or commissions and you understand it going into it, you probably wouldn't fire your advisor for that. It's when those unexpected.
Yeah, that's true.
Yeah, it's when you
see
these fees that you didn't know about. Right.
Like how clear is it? Like how clearly is it communicated? We, in our instance, clients are aware of their fees not only because when we are hired, we disclose that, but in addition, And people forget over time, they get confused, so that kind of thing can happen. But we also each quarter, when we charge our fee, it usually comes out of the account directly, but in your statement from the brokerage platform, that is a line item in your statement. And we send a statement as well when we send a performance review, just saying, oh, here's how much it costs this quarter. So people aren't tuned in, but like anything, sometimes some things you pay attention to, sometimes you don't pay attention, and for whatever reason, you're more attentive at another point in time. And you just want to make sure that it's clearly defined and identifiable. Jeff, you look like you wanted to comment. Jeff Tamani, were you looking to get in on
actually, I didn't have comments. I agree with everything you're saying. And there's, part of our process here and the process of many fiduciaries is around disclosure and defining what services, what advice we do offer. We don't always do the best job of that. I was on a call a couple of hours ago, and it was just a review call where I was talking about the portfolio and asking if the client needed any more money or distributions. And she said, well, I'm thinking about buying a car, and my car is coming off of the lease. And then I started talking to her about lease versus buy, buying out the current lease, because her Honda CRV is probably worth more than the lease buyout value, or at least the number. And I got the feeling that she didn't realize that we would offer that kind of advice. So I think it's also important for us, at least in our practice, to say, hey, we will be able to help you or consult with you on all things financial or asset protection related, insurance related, and help point you in the right direction. So I think we also, as advisors, need to be able to say, hey, these are the things that we do.
I think that's where a significant part of the value of the fees that we charge that is derived from those things other than portfolio management, the financial planning, the reviews, I'm thinking of buying this, I'm thinking of doing
I'd say
this.
over and above as opposed to other than.
Yes. Yes.
Yeah.
Over and above portfolio management, the things other than or over and above. Absolutely.
Yeah.
So I don't want to run out of time here. I want to get through this. Number 3 of the reason that people terminate their relationship with their advisor, and Mr. Boyd, you called it before I started, poor communication and follow-up.
Yeah, I think that's a very common frustration for clientele that move from one advisor to another, is they have a sense that they don't hear from someone enough. I think this is something that's always challenging for all advisors, including ourselves. We try to send out newsletters, webinars, radio show and podcast episodes where we communicate our views routinely, and yet that's never the same as a phone call or an in-person or a virtual chance to have interactive communication, which is still very, very important.
Yep.
I think communication also, there's the advisor being a lousy communicator, as this article says. There's also the fact that sometimes there's just a personality or communication differences. The client wants
style.
That's really what I'm thinking. Also, that happens quite a bit.
Not always a good fit. Someone sometimes advisors want to tell you, here's I've got all the answers. Let me tell you, that kind of thing, and they're not always listening and responsive. That kind of thing. I think, is that the kind of thing?
Yeah, that's one of the things. And the other side of that is some clients want you to tell them, hey, this is the way it should be. And then the advisor comes across as, well, you have this option, and this option. And the client really wants, hey, tell me what to do. So communication.
Yeah, you got to read. You got to read what people are, where they're at, and what they want. Yeah.
Right.
That's a great segue to this next article, which is on bottomline.com. It's a bottom line, for those people who don't know, they condense longer subjects into shorter narratives so that you can read a lot about whatever subjects or whatever thing you're thinking about. So
Yeah.
my mother-in-law bought a subscription to this service to me probably 20 years ago, and she renews it each year for my Christmas gift.
Nice.
So,
Nice.
so I appreciate it, and I've learned a lot over the years. So this is about how to get the most out of your advisor if you're the client. And the first thing in the article, it says, ask your advisor to explain everything so that an 8-year-old could understand it. Chris, we talk about this a lot. I often say a good advisor has the heart of a teacher. And I think that's what this is about.
I can't help but think of the movie Philadelphia.
Mm-hmm.
If you recall that one, he uses something along those lines all the time. I forget if it was an 8-year-old, but explain it to me like a first grader or whatever it was. You know,
No, it was, you're right on. It was like 8-year-old or 6-year-old. That's Denzel Washington's character.
Yeah, excellent movie as well. But
Sure.
you know, I think it's really important that we, you know, you earlier in a prior episode, you called out, I think it was Brian, saying, well, people aren't going to know what that means. We tend to get caught up in our inclinations to use jargon that we become accustomed to as professionals.
Yeah, whatever industry you're in, this happens.
Yeah, that
Right.
non, you know, like lay people of whatever, you know, not of the same profession, don't necessarily know the lingo. And so we have to take time to explain it a little bit to make sure people understand what we're talking about, and so they can evaluate, does it make sense for them, right? So totally agree with that. I also had an interesting interaction recently. A friend asked about, actually it was a friend of my daughter's, said their advisor wanted their grandmother to sell her long held stocks, whatever the two stocks were, in favor of SPDR, a spider, which is a brand of ETF, exchange traded funds, which is a lot like a mutual fund essentially. Right. So I had to step back and be like, okay, you know, here, like, it takes some time to explain some of this stuff. What were they wanted to be more diversified,
right?
It is the bottom line. But if they're only buying SPY or SPTM or, you know, something that it might get more diversified, but you still might have a lot of risk, you know, and which is to say you're going from a couple of stocks to still an all stock, you know, investment strategy. So anyway, it's a good example of the thing. You got to step back and explain things a little more deliberately.
I think this applies to, you know, your financial advisor, your accountant, your lawyer, your doctor, because I kind of get worried and turned off if someone of some different profession is using language that is, they're just trying to impress me with some knowledge that they have. And at the end of the day, I don't feel like I'm being heard or I'm understanding what they're telling me.
Someone's just trying to show off that they know stuff.
It happens too often.
Yeah, it's I mean, on one hand, people can be impressed, say, oh, they really know what they're talking about. And then, you know, there's some value in that. But ultimately, you want people to understand. You want to bring them along. You know, yes, you want them to know you know what you're talking about. But, you know, you also want them to have an understanding of why it is you're taking the view or explaining, you know, what they should do. And they have to relate to it. So it's a tough fine line to walk, I think.
It is.
All right, we got about a minute left.
Well, I'm not going to jump into another topic because we won't have time, but I'll just go back to something that I say all the time to people when they're thinking about choosing an advisor. I ask 3 questions. You guys have heard this too much. 1, is the person a fiduciary? 2 is, how are they paid? And 3 is, where is my money kept? And if that person who you're talking to can't answer all three that you can easily understand, yes, they're fiduciary, this is how much you're paid, and in my view, my money is kept at a third-party custodian, SIPC insured, it's time to move on if those three things don't check the
Yeah, I
list
think
for me.
those are great. That's a good checklist, very easy to remember, and going to get you on the right path. Guys, thanks so much for spending the time with me. I want to mention to our listeners, obviously, we're happy to talk to you if you would like to get some help in thinking about any of your financial planning or portfolio needs. Our team is here to be a resource to you. Please reach out to us through our website, amrfinancial.com, or give us a call, toll free, 866-771-8901.
Talk Show.
Asset Management Resources, LLC, and J. Christopher Boyd, CFP, provide investment advice on an individual basis to clients only. Proper advice depends on a complete analysis of all facts and circumstances. The information given on this program is in the nature of general financial comments and cannot be relied upon as pertaining to your specific situation. AMR, LLC cannot guarantee that using the information from this show will generate profits or ensure freedom from loss. Listeners should consult their own financial advisors or conduct their own due diligence before making any financial decisions.